Imagine this. You wake up, check your trading account, and boom, 1,000 rupees richer. The excitement of seeing your balance grow overnight is unparalleled. You might even feel a rush of adrenaline thinking about the possibilities that lie ahead. Sounds like a dream, right? It's the kind of scenario that makes you want to pinch yourself to make sure you're not still asleep. The idea of making money while you sleep is incredibly alluring. Well, in the stock market, it's not entirely impossible. The market is a dynamic place where fortunes can change in the blink of an eye. With the right strategy and a bit of luck, you can indeed see significant gains in a short period. But hold your horses before you start dreaming of quitting your job. The stock market is as unpredictable as it is exciting. It's important to approach it with a level head and realistic expectations. Making money in the stock market, especially in a single day, is not a guaranteed thing. There are countless factors at play, and even the most experienced traders can face unexpected losses. It's like a game of skill, a bit of luck, and a whole lot of learning. You need to understand market trends, analyze data, and continuously educate yourself to stay ahead. This essay will explore one such strategy: momentum trading. Momentum trading is all about capitalizing on the current trend of a stock. If a stock is moving upwards, you ride that wave, hoping to sell at a higher price. It's a strategy where you try to catch a stock that's on a roll, ride the wave, and make a quick profit. The key is to identify the right moment to enter and exit the trade. But remember, every strategy has its risks, and we'll talk about those too. Momentum trading can be highly rewarding, but it can also lead to significant losses if not executed properly. So if you're ready to learn how to potentially make 1,000 rupees in a day, buckle up, and let's dive into the exciting world of momentum trading. We'll cover the basics, the strategies, and the risks involved. Just remember, this is not a get-rich-quick scheme. It's about patience, discipline, and a willingness to learn from both successes and failures. It's about understanding the market, managing risks, and making informed decisions. With the right approach, you can navigate the stock market successfully and potentially see those exciting gains. What is momentum trading, you ask? Imagine a snowball rolling down a hill. It starts small, but as it rolls, it gathers more snow, becoming bigger and faster. Momentum trading is similar. You're trying to identify stocks that are moving in a particular direction with increasing force. These stocks are like the snowball, picking up speed and potentially generating profits for traders who can ride the wave. You buy when the stock is going up, hoping to sell it at a higher price before it loses momentum. Sounds simple, right? Well, it's not as easy as it sounds. Identifying these momentum stocks requires a keen eye for market trends, news, and a bit of technical analysis. We'll talk about those later. But for now, just remember, momentum trading is all about catching the right wave at the right time. Now, how do you find these momentum stocks? It's a question that every trader asks at some point. The answer isn't always straightforward, but there are some key indicators to look for. It's like picking a winning horse in a race. You wouldn't just pick any horse, you'd look for the one with the best track record, the one that's been performing well recently. You need to look for certain characteristics that indicate potential for a strong run. These characteristics can help you identify stocks that are likely to continue their upward momentum. Firstly, focus on liquid stocks. Liquidity is crucial because it ensures that you can enter and exit trades with ease. These are stocks that are traded frequently, meaning you can easily buy and sell them without affecting the price too much. High liquidity also means there's a lot of interest in the stock, which can be a good sign. Think of popular companies, the big players in the market. These companies often have high liquidity because they are well known and widely traded. They are usually more liquid. This makes it easier for you to buy and sell shares without causing significant price changes. Secondly, look for stocks with high volatility. Volatility is a measure of how much a stock's price fluctuates over a given period. Volatility means the price fluctuates a lot. While it sounds risky, high volatility is what creates opportunities for momentum traders to make quick profits. The more a stock's price moves, the more potential there is for profit. While it sounds risky, high volatility is what creates opportunities for momentum traders to make quick profits. The more a stock's price moves, the more potential there is for profit. Lastly, keep an eye on the news and announcements. News can have a significant impact on a stock's price, often causing it to move sharply in one direction. Positive news about a company can send its stock soaring, creating a momentum wave you can ride. Conversely, negative news can cause a stock to plummet, so it's important to stay informed. Remember, picking the right stock is crucial for successful momentum trading. By focusing on liquidity, volatility, and staying informed about news, you can increase your chances of picking a winning stock. You found a potential momentum stock? Great. But that's just the beginning of your journey. Now comes the tricky part: timing your entry and exit. This is crucial because even the best stock can result in a loss if you mistime your trades. This is where technical analysis comes in. It's like having a toolkit that helps you decipher the market's language. Think of it as reading the stock's chart like a map, looking for signals and patterns that indicate the right time to buy or sell. These patterns can tell you a lot about the stock's future movements. There are various technical indicators you can use, but for simplicity, let's focus on moving averages. They are among the most popular and easiest to understand. Moving averages are lines on the chart that show the average price of a stock over a specific period. They smooth out price data to help you identify trends more easily. When the stock price crosses above its moving average, it can be a signal of upward momentum indicating a good time to buy. This crossover suggests that the stock is gaining strength. Conversely, when it crosses below, it might be time to sell. This downward crossover can indicate that the stock is losing momentum and could continue to decline. Remember, timing is everything in momentum trading. The market can be unpredictable, and even small delays can impact your results significantly. Entering and exiting a trade at the right time can make all the difference between a profit and a loss. So always stay alert and be ready to act when the right moment comes. Happy trading! Section 5. The Art of the Quick Trade. Momentum trading is all about quick trades. You're not looking to hold the stock for long, just long enough to capitalize on the upward price movement. This is where the concept of scalping comes in. Scalping is a very short-term trading strategy where traders aim to make small profits from small price changes, often within seconds or minutes. It's like grabbing a quick snack from the market instead of having a full-course meal. Scalpers open and close multiple trades throughout the day, aiming to accumulate small profits that add up to a significant amount. However, scalping requires a lot of focus, discipline, and a good understanding of market dynamics. It's not for the faint of heart and is best left to experienced traders. Section 6. Don't be greedy now. Remember that snowball analogy? What happens when it rolls for too long? It can either become too big to handle or hit a bump and fall apart. The same goes for momentum trading. Greed can be your biggest enemy. Don't get carried away by the excitement of seeing your profits grow. Set realistic profit targets and stick to them. It's better to walk away with a small profit than to hold on for too long and risk losing it all. Remember, the market can turn on a dime and what goes up can come down just as quickly. Don't let greed cloud your judgment. Section 7. The risk you take. Now for the most important part, risk management. Momentum trading, like any other trading strategy, involves risks. The market is unpredictable and even the most well-researched trades can go wrong. That's why it's crucial to have a risk management plan in place. The first rule of risk management is to never invest more than you can afford to lose. This is crucial. Don't let a few successful trades fool you into thinking you're invincible. The market can humble even the most experienced traders. Secondly, always use stop-loss orders. A stop-loss order is like an insurance policy for your trade. It automatically sells your stock if the price falls to a certain level, limiting your potential losses. Section 8. Practice makes perfect and maybe some profit. You wouldn't expect to become a master chef overnight, would you? Similarly, becoming proficient in momentum trading takes time, practice, and patience. Start by learning as much as you can about the market, technical analysis, and risk management. There are plenty of online resources, courses, and books available. Once you have a good theoretical understanding, start practicing on a demo account. A demo account allows you to trade with virtual money, giving you a feel for the market without risking your hard-earned cash. Once you're comfortable and consistently profitable in the demo account, you can consider starting with a small amount of real money. Remember, slow and steady wins the race. Section 9, the final word. So can you make 1,000 rupees in one day using momentum trading? It's possible, but it's not easy, and it's certainly not guaranteed. It requires a good understanding of the market, a solid trading strategy, strict risk management, and a lot of practice. Remember, trading is not a get-rich-quick scheme. It's a skill that takes time and effort to develop. Don't be discouraged by initial losses. Learn from your mistakes, adapt your strategy, and keep practicing. And most importantly, never stop learning. The market is constantly evolving, and so should you. So go out there, explore the exciting world of momentum trading, and see where it takes you. Just remember to trade responsibly and always prioritize risk management.